This is the future. Evolution.
And the first one is Talentre. It is an edtech, blockchain-based recruitment and education platform. They have a video which we're going to watch, and then there will be questions. So I am going to share my screen and play the video they prepared for us.
Welcome to Talentre, your go-to Web3 education and talent network platform. Here, you can explore the Blockchain Academy, Job Hub, achievements, and exercises. Check out a range of open positions in our Job Hub. Now, apply for your desired role. Claim your achievements, like the BNB Chain Elite Builder, to showcase your blockchain development experience. Our platform verifies your credentials based on your on-chain activities, such as the number of smart contracts deployed. Or perhaps you're an NFT rookie? Claim it and flaunt your NFT expertise. Seamlessly verify your work and education history with a few easy steps. Simply input your work or education email and validate using the received code. Exercises are a fantastic way for you to hone your professional skills. Select an exercise to view details and rankings. After completion, you can see your scores and mint an NFT credential to demonstrate your Web3 knowledge. Our on-chain CV presents comprehensive and trustworthy information as users verify their work experience, education, and more. Our system generates labels, tags, and overviews for talents' skill sets and expertise. This enables genuine and trusted connections between talents and companies. And if you're a business seeking Web3 talents, rest assured, you've come to the right place. Post a job or view detailed statuses of posted positions. Choose exams for assessments, streamlining the hiring process and boosting efficiency. Browse numerous talents within the platform. Search the right talent with keywords. Effortlessly connect right here. Join Talentre today.
Yan, you're here. You also wanted to say a few words. I think we got most of it from the video, but if you want to add anything before the questions.
Yes. Sure. Hi, everyone. My name is Yan, and I am the CMO of Talentre. So as you can see, our ecosystem actually have three components: education and trusted talent network, and then talent distribution. I'd like to go over a few of the unfair advantage that we have, because who doesn't love them, right? So the first one is, as you might have seen on the video as well, we have established an iconic partnership with BNB, and one of the biggest education event in the industry going on right now is the BNB Zero to Hero camp, which is co-hosted by us. Second advantage is that we have super solid academic and government support. Our advisor are actually VP of HKUST, which is the MIT of Hong Kong. So through our advisors, we got a lot of unparalleled resource in the academic space and the government organization space. And lastly, I just want to address that we have the largest Web3 Gen Z community in Asia. So since launch, we actually have attracted over 100K talents and from 50 different universities worldwide.
Okay, that's pretty cool. Do you have numbers? How many people are using the MVP so far? And have you made a push to get more people on board?
Yes, of course. So we just launched our MVP about a month ago. And at the moment, we have around 1,000 active members that are coming into the platform, applying jobs, studying their profile, and interacting on different features.
All right. Do we have any question in the chat? Let me check if anyone from the jury wants to ask a question.
Hello, thanks for the presentation. So I'm not sure I understand the Web3 element. So maybe we can start by asking, are you looking to raise in equity terms or token terms?
Yes. So we're raising for token, and this is our second round. Our first round was finished last year in Q3 with 300K raised. And this round is our C round. We raised 1 million with 30 million valuation in token.
Okay. So can you explain the token utility within the network of the token?
So here's our tokenomic. Talent is our token to distribute value in the talent market and boost our Web3 talent network. And the token is actually an arm for us to generate more users for our platform. And you mentioned about utility. We actually have very, very solid and strong utility. So as you can see from the graph here, participants on the platform includes job seekers, include educators or learners. They can come and stake their tokens, and then they can also use the token to lock premium courses, purchase contents, memberships, and also advertising on Talentre.
We only have 2.5 minutes, so I just wanted to ask a question. What I really liked was your huge number of highly reputed universities you are partnering with, but what exactly is the nature of the partnership? How are you going to be able to leverage these relationships?
Yes, sure. Including co-marketing partnership with the universities, as well as certified credentials or certificate, but this is a secret to keep here.
All right. Well, I think that's it. Thank you, Yan, for presenting Talentre. And we will move on to the next one, which is Futurent. Futurent, they are bringing yield with real world assets, mainly real estate. And we will also have a video, so I will share my screen. And Alan will be here for the questions and the answers.
Hey everybody, my name is Alan, CEO of Futurent. First of all, thanks for having me today. Futurent concept is actually super easy to understand. A user-friendly and fully legal compliant platform is making investing in real estate quicker, simpler, and easier than ever before. Enable anyone to participate from anywhere in the world in a matter of just a few simple clicks and starting from just $50. For each fractional investment, we mint an NFT, which gather the property ID, pool info, and all related docs on chain. These NFTs are claiming vouchers for rental revenues and appreciation through the secure smart contracts for additional safety. Behind every successful project, there is a successful team. My background is mostly from the traditional startup space. My digital agency was covering full spectrum of services and advisory for more than 200 startups in the last decade. And during this period, we cooperated with several crypto-native companies as well. Beside us, I have to mention our world-class blockchain engineer, Noah Jelic, and Christian Škarica, a reputable member of Polygon ecosystem. Aside from the team, we cannot miss all our advisors. There are Sandeep, director of TrustWeb, Niki, owner of Luna Media, Shisha finance team, and many more to follow. At Futurent, we understand the importance of a stronger token utility and always looking for smart, reasonable additions to the current list of utilities. Escrow, lower fees, dashboard access, special discounts, and most importantly, it will be used for our tier model with additional benefits such as higher allocation size, early access to new listings, platform fees sharing, exclusive airdrops, and similar. Aside from token, generating revenue and reaching the solvency level has always been a top priority. Generating the revenue from day one, we will put our skin in the game, taking part in the pools too, mostly around 20% per property. In addition, we implemented several revenue streams, both on-chain and off-chain ones, including many structured fee models, as well as subscription-based ones and other high-efficiency revenues. We are not classified as a security, no paperwork attached. There are no lockups, a huge advantage on the liquidity side of it. Protocol is fully compliant and business model was assessed by the best legal teams. And we are community-first kind of a project, striving to optimize the yield and experience for the users. We were about to launch MVP already in Q4, but due to massive upgrade, we had to rebuild part of the platform, and we are releasing it in 4 to 6 weeks. We are already in touch with some top-tier exchanges. Our BD team is in touch with several authorities to build a government-level infra tools based on our fundamentals. Feel free to reach out to us by any point of contact. Someone from the team is always around to support the process. Thank you for your attention, guys, and now I'm all yours to answer your questions.
I'm always skeptical. It sounds like the easy play, right? Real estate, huge market. Sure, you have advantages, escrow, lower fees, fractionalization. However, it feels like crypto is degen people who might not be interested by 10, 15, 20% APR. So it feels like there might be a mismatch in the market fits. And also you did mention a few competitors, but I'm not sure there is a real estate yield crypto project that is successful already. So what do you think of this?
Yeah, thanks for the question. So first of all, I wouldn't agree that people wouldn't be attracted by this sort of APYs. It's still much higher than a lot of protocols in the DeFi. Although we see a lot of opportunities in the transitional users from Web3 to from Web2 to Web3. So we definitely see our audience on both worlds, and we can be a really good gap to a really good player to fill in the gap. And I also wouldn't agree that there is no successful project yet, since Centrifuge basically tokenized around 250 million assets from Block Tower Capital, and they have a huge backing by them. We can see there is a market for it, and the predictions for the next 3 to 4 years, it's still very, very early. I definitely agree with that, but we can see a lot of movements in the market, in the sector, and in the next 3 to 5 years, it can be predictions are to raise the market to about 5 trillions, which is definitely a big market that can settle in a lot of projects, and we see a pretty big chunk of it for us. So we are definitely doing a lot of research, a lot of second opinions. We are in the space for 2 years, building it behind the curtains. We used more than a year, I guess, to find the proper legal solution. It's not a perfect one, but that's what we have right now, and we are definitely going to upgrade it over the time.
So we had a very interesting question from Bob Clark from the chat. How do you plan to overtake Realty, which is the current leader? I mean, they do have momentum, and momentum is very important.
Yeah, I agree. Realty is definitely an option, but I would say they are using pretty standard investment thesis. That is something that we different from the others as well, because so we are going to generate between 25 and 55 APYs over the time. Realty is there on a safe side of it. They are also tokenizing third-party properties. We, on the other hand, we are managing the portfolio. Our SPV is taking care of the portfolio, optimizing it, and we are there to generate as high as possible APYs and do it in the safest possible way. I'm not sure about their risk management. I wouldn't go into that, but we on the other side are taking part of the portfolio of the pool. So we are definitely here to manage it in the best possible way. We have a lot of reputable partnerships in line. We would like to engage. We are currently working on engaging some auditors like PwC, Deloitte, and similar. So we are doing definitely everything to provide the safest and most stable portfolio and project out there.
How can you achieve 35% APY on real estate?
Actually, it's pretty easy. We are basically investing in different commercial estates, such as mobile homes, parking lots, small shopping malls. Those are all pretty easy to understand if you are in the sector. We are basically doing a weekly reports, follow-ups on the currently active deals out there. We have a research team of 13 people, but they are basically looking for higher end properties. Our investment thesis is covering micro investments between 100K and 500K. And this is where we can achieve this kind of APIs. Obviously, we cannot go for big properties like 10 million worth of shopping mall, because those they cannot achieve this kind of APYs. And we also see a great opportunity in flipping the properties in a year or two. So if we have an access to off-market deals. So if we can get like a really high appreciation on top of it in like 2 years, additional 30%, we are definitely going for it if we have an alternative property behind it, and we will.
All right, so you guys can keep on chatting about the details. in private will connect you. So basically positioning yourself as a realty on steroids. All right, we will move on to our third project, Soil, which is also about returns on stablecoin, and I will share my screen for their video.
Welcome to Soil. Soil is a lending protocol securing cash flows in the real-world assets. It is a blockchain-based marketplace that connects traditional finance with the crypto world, and it reshapes corporate debt and fixed income investments. It is an infrastructure where established enterprises can get the financing and crypto investors can earn a competitive yield on their stablecoins paid in stablecoins. Our revenue model profits from the fees earned by connecting lenders and borrowers and on the arbitrage of the cost of the capital. In Soil, our mission is to provide crypto investors with a stable, attractive, and secure yield on stablecoins, and they open a new alternative source of the liquidity for the traditional regulated financial markets. To achieve this, we had to face and solve the following problems. Low adoption of crypto space results in a limited number of diverse business models available in a DeFi, and it is reflected in the low profitability of the most popular lending protocols that offer a low yield of only around 2% APY. And the projects that offer sky-high returns based mainly on the self-printed tokens were unsustainable and didn't survive the bear market. Moreover, most protocols secure their stability with the fragile collaterals consisting of one class of highly correlated assets, a basket of crypto tokens. On the other hand, traditional finance also has its limitations. Raising the capital, for example by issuing the bonds, is time-consuming and expensive. Financial products are an infrastructure are anachronistic and not adopted to serve companies operating in the digital era. Regulatory and geographical barriers limit the international expansion of financial institutions and increase their client acquisition costs. We tend to believe that we have living in a global financial system. However, financial products were not available truly worldwide until blockchain appeared. And moreover, some financial products are only available to a narrow group of clients, for example, corporates or wealthy clients. Soil solved this problem by bridging traditional finance with the DeFi. And how exactly we solve the challenges we faced? First of all, we bring tangible yield backed by the real-world asset generated by the established businesses operating in the traditional world. And we pay interest in the real dollars denominated in the stablecoins. We mitigate the default risk by collecting a diversified class of uncorrelated assets as a collateral. We have implemented a unique guarantee fund. We cooperate with a superb private debt fund that are supervised and regulated, and that provide us with a healthy pipeline of demand for the liquidity. We are fully compliant with the regulation and we are ready for the international rollout, and we are available to the investors worldwide. Our addressable market, corporate debt market, is valued at $14 trillion, and taking only a drop from this ocean will be a massive success for us. We have a team experienced in managing private debt funds, business development, and transactions. Our investment team has managed debt funds with their assets exceeding $5 billion. And what is the Soil value proposition? We design deflationary tokenomics entirely capturing protocols profits. We have a unique team combining tech and finance expertise. We have secured over $25 million in the liquidity demands. And we have a break-even point in the horizon of 12 months. Our investment goal is to raise up to $3 million to finance a community that will provide us liquidity to the protocol. We want to finance a guarantee fund and to provide the liquidity to the loan pools. And we want to provide also liquidity to exchanges.
MVP of the protocol is ready. Look how it works.
Thank you very much for your attention and for the interest in soil.
All right, Jakub, are you here? Yes, you are.
Hi, guys.
Welcome. So I will start with two questions. The first one is, you guys manage 5 billion in assets. That's a huge number. What was the performance on this one? Can you give us more details?
Exactly. Hi, guys. Thank you for the opportunity to present the project. First of all, I would like to start to present the biggest asset in the team, I guess. So my team. So Nick and Mike are together today with us. Nicolas is a founder and CEO of the Mount TFI. It's one of the leading private debt funds in Central Europe. And yeah, Nick, can you elaborate a bit about the investment team that we have?
Yeah, hi everybody. Yeah, so just quickly, so I think what's really unique, I think that was also in the video, which should be added, is that in our protocol, we really bring in the tech and the finance. So a lot of the DeFi space today, the protocols, they don't really have experience on underwriting or securing the debt transactions. So before we joined and we created Soil as one of the co-founders, I founded one of the leading private debt funds in Central Eastern Europe. And in the last 5 years, with over 200 million loans, between 1 to 5 million loans, always on the debt side, securing cash flows on SMEs, so small, medium enterprises across, let's say, Poland, Czech Republic, Romania. So we're very strong. So what we really add value is that the deposits that are on the protocol, we really have a very strong team that can deploy the capital in the market. And number two, what is very important for us is the liquidity. Because we've been running funds for the last 5 years and we bring that into the protocol, is that the liquidity that you can get for depositing the capital for 6, 12, 18 months, it's actually falling into a fund that is very transparent on a protocol. You see the geographical diversification, the SME diversification. So we can align a living fund with the liquidity of the protocol. So the investment team has been managed, let's say, 5 billion euro of funds prior. We've been running one of the lead funds, and now we combined with Soil, and we're bringing that whole value onto the protocol. So happy to ask any questions, how we structure deals, how we secure the yield. So that's definitely something we feel strong about.
Sounds right. Can you share the number, the returns per year on this 5 billion you guys managed?
Yeah, sure. So we run two funds. So one is a diversified fund. So the diversified fund, that means we do mezzanine transactions. So it's a little bit higher on the debt scale, and you do senior loans. So it's really taking a bit of the banking world. The banks are ineffective or slower. So this is a mission that we have, is to take this big piece from the market and supply it to the companies. So on a diversified fund, we do anything between 8 to 10% yearly. So with the USDC return, and on the mezzanine funds, we do anything between 14 to 16%. And this has been audited. We have one of the biggest investors in the funds is the European Bank. So we're transparent. We have the due diligence done. So that's the APY on the USDC. And we also have a booster in the coin, and that Jacob to talk about that. Yeah.
Awesome. Last question from me, and then we can have from other people. You mentioned you have $25 million in liquidity demand secured. What does it mean exactly?
Yeah, so we are about to launch a protocol, I guess, in the next 2 months. As you have seen, the protocol is ready. So right now we are doing smart contract audits. But thanks to the cooperation with the fund and our team just screened the companies and did the due diligence. So we are ready to deploy with the capital. So it means, if the crypto investors will provide the liquidity to the protocol, so we can immediately deploy this capital to ultimate borrowers.
So I'm not exactly sure which kind of liquidity you're talking about, because you also mentioned you're raising to provide liquidity to the protocol. You're raising to provide liquidity to the protocol, but you already have
25 million relates to the liquidity demand. So it means that we've got a screened companies operating in the traditional world that we can lend money to. That's what I meant about the liquidity demand. What we are looking for, first of all, one of our investment goal is to build a initial total value locked. So it means that our own money, our own working capital, we will allocate to one of the loan pools. And the second of all, yeah, so this is the open protocol. So we are looking for the investor that will allocate the money on the protocol and will earn the passive income.
Last question from my side: if you guys already manage 5 billion, why kind of take the risk going into this unknown wide crypto territory?
So especially, the fact is that how you right now get the liquidity to the protocol, to the private debt funds, and how you collect the money. So right now, Nick can elaborate more about it, but it's like a traditional roadshow. If you want to get an investor to the private debt fund, VC fund, or whatever, yeah. So you need to do a proper roadshow. Having a blockchain and using a blockchain community, it opens an alternative source of the liquidity. So right now you can easily address and target investors truly worldwide. So no matter if you are running a private debt fund, like for example in Europe, right now you can easily access investors from Buenos Aires, Tokyo, or whatever, easily without with an insignificant transaction cost and without any geographical barriers and administrative barriers. So that's why using a blockchain in this in getting a liquidity is it's a game changer for traditional and regulated companies or funds or institutions. Yeah, so that's why the blockchain is, as I said, it's a truly global access to the alternative source of the capital.
Got it. And question from Osayi: if you have managed 5 billion in assets, why will you need money from investors to run the protocol?
So $5 billion, this is the experience of our team. So this is this is a track record of the investment team that is joining the Soil protocol. Right, Soil protocol is the alternative. This is a new company, yeah? So it's so that's why we show that we show how our team is experienced and they know what they do, and they take care of the to mitigate the default rate risk and so on and so on. So.
Got it. All right, guys. Thank you so much. We went a bit over time. We will have the last project, which is Phaver. It is one of the most adopted D-apps in crypto, which is amazing, showing adoption, social app, and they have a video. And I see more questions coming in, so you guys can connect later.
Hi, everyone. I'm GM. I'm Tommy, one of the co-founders of Phaver. And today I'm going to present to you what we're building, what is Web3 Social, why 2023, and why should anyone ultimately care. So what Phaver is building is the gateway to Web3 Social. We're one of the biggest apps on Lens protocol. But before dwelling deeper into that, let's just start by asking the question, why social? There's about 5 million unique self-custody DeFi users. Even if you zoom out, looking at crypto Twitter has about 450 million monthly actives, of which maybe 1/5 are crypto curious. So call it double digits something millions, whereas pretty much everyone on the planet with internet access is in social media. So clearly social can be a big vertical for next wave of adoption. But why would anyone care? You already have Facebook, Instagram, Twitter. One way to look at it is from the creator's perspective. So there's more than 200 billion of revenue going through the platforms, and less than 10 billion of that is collected by the creators. Why are we highlighting OnlyFans here? Funny enough, OnlyFans is probably the fairest out of all of the platforms out there, sharing 80% to the creator and 20% to the platform. So clearly something's off with this balance. This is another piece, courtesy from Messari, looking at the different adoption waves. So they are predicting that after NFTs, social can be the next big thing for crypto and Web3 adoption. Looking at the latest Lens protocol stats, there's about 100,000 publications per day in Q1 this year. So the growth has been quite steady in 2023, despite the protocol being in a gated access. This is from Dune Dashboard, so anyone can actually query this data as it's public on blockchain. Phaver has been about 50% of the Lens protocol hosting volume. So we're building the experience layer, and highlighted here in the top left corner. Among the front ends, we're building different pipelines across the whole ecosystem. if we zoom into the social graphs, these are the 4 biggest ones. Right now, Phaver is working closely with Lens Protocol and CyberConnect and integrating with both. So if Web2 social was more of a cult where if you leave Facebook, you have to leave all of your friends behind. These are 3 key pillars how we see social can be disrupted in Web3. So starting off with the social graphs, key thing here is that some of your friends might be on Lens, some of them might be on Forecast or CyberConnect. Phaver wants to be the one-stop shop where you can access all of these protocols and broadcast across all of the networks. Second piece is reputation. So instead of selling blue ticks with a $7 paywall as Twitter is right now doing, in Web3, there's various ways of combining on-chain assets and credentials to increase your reputation in the system. So this ties back to DID, NFT communities, etc. And essentially what we want to do is rolling all of this up into our gamified token economy. This is a pretty busy slide, so I won't go into too much detail here. In terms of the highlights, how we're building the system is essentially an indirect revenue share, where ultimately from advertising revenue, the creators and the users can get exit liquidity to their tokens that they earn in the system. So in addition to providing Sybil resistance and novel utilities, for example, for the NFT communities, this is the way we are planning to share the value in the system back to the users. We have about 200,000 unique users, of which 65,000 are daily actives, with session lengths that are higher than Instagram already at this gated beta stage. So very happy with our community. We have an amazing contributor base in our Discord. And right now we are finalizing our fundraise where the VC part is oversubscribed, but still onboarding KOLs to the ROM. If anyone hasn't tried out Phaver, you can access it without any code. So go ahead and try it out. We have a lot of cool campaigns going on. Go and check out our Discord and hope to see you all either in the metaverse or in real life events. Thank you very much for tuning in today.
All right. So do we have someone from Phaver here? Because Tommy was actually landing off a plane. So I'm not sure if he's here. Oh, you're here.
I'm actually here, but in a taxi in Hong Kong, so hopefully the connection won't be too patchy. But I'll try to answer any questions you guys might have. I see one in the chat at least.
Let me read it then. How did you scale Phaver? Yeah, from 0 to 190,000 users.
Yes, I think it's been a combination of multiple factors. So obviously, kind of scaling together with Lens has been one of the big ones. We've been the biggest whitelisting partner for Lens, and that obviously is kind of organic growth piece. We've had some great KOLs from the get-go, like Efe Bulduk from Turkey, spreading the word. So Turkey became the biggest market for us in the beginning after he kind of believed in the thesis and was our ambassador. Then we've been working very closely with various partnerships when it comes to NFT communities or other players like wallets. So one good example is like Degen Score. Score holders connecting their beacons to Phaver in a 1-week campaign. So there's been a lot of synergy in terms of collaborating with projects as well. So we haven't done any paid advertising. Obviously, some people, so you can earn the points in our app, which will be convertible to the tokens based on your credentials in the future. So I guess like tokens are also self-marketing, which has contributed as well into the mix.
Cool. I had a question regarding the financials. You mentioned OnlyFans is 80-20, 80 for the creators, which is great. what is the split you will do? And if you guys get less revenue, how will you also pay salaries and grow? You do need to make some money at some point, right?
Yeah, I think it's a great question. I think you could back solve it from kind of, even if you think about Facebook and Instagram, like most of the money which was spent in the early days was used for user acquisition. In our model, basically, like that marketing spend in fiat is very minimal. So, Facebook at the margin with like, kind of opposite revenue share versus OnlyFans. So I think like, in a stable state, you would target like something like 20% EBITDA margin. And I think the other thing where you can kind of have less costs is that bunch of the moderation and curation and other functions of the company could actually be outsourced to the community. So that would be another piece, where you can actually, still be a profitable company, but basically share more of the value, like even in the 80-20 way as OnlyFans into the user to the users.
Got it. So have you decided on a number for the split, 80-20 or another?
I think that will be like a dynamic thing. So 80-20 probably is like if I would need to throw in a guesstimate, but obviously we'll just adjust this on the go and kind of see like, share as much as we can towards the token holders while still, making sure that we always have the available capital for growth opportunities, etc. So cannot pinpoint to any specific target, but like probably it would be kind of an inverse. It would be more closer to like marketplace take rates in Web2 versus, Facebook has 90 billion revenue and 1 billion going to the creators, which is kind of sounds a bit unfair.
Right. Why do you think there is no global Web3 social network yet? Because there's lots of communities, but maybe it feels like mainstream people, the bulk of the people in the world, 98-99%, they don't care that much about everything, if their data is stolen, if they get paid or not, or they just want to go to the platforms where people are. So it's kind of a chicken and the egg, even though you're solving it at first, but we're still far away from mainstream adoption. Like right now kind of the infrastructure, even the infrastructure is in early days when you look at, what Lens has been building on top of Polygon and, what CyberConnect is injecting. I think in overall, like, blockchain is shaping the architecture of the internet. And as people learn about these new novel use cases, more and more people will enter the so-called metaverse, where in our definition is more like, when your online persona becomes more important than your real life persona. So I think it will probably take more than 5 if you weigh the benefits versus what you can do in Web2 social, where you essentially don't own anything you do. Like your whole social life could be wiped out in an instance in Facebook or in Twitter. So that's essentially what we are also doing, is kind of bootstrapping the network. And obviously we need to start with the Web3 natives who already understand it, and then kind of go layer by layer, peeling the onion. All right. One question: how do you generate funds? And then Tokyo will ask one, and that will be it. How do you generate funds? I mean, how do you generate profits, right? Yeah. So I think in any social media, advertising is typically the biggest revenue stream. Then you can have various adjacent marketplaces or Patreon, Substack type of subscription models. So what we are aiming to do is have a advertising model which is essentially not spying on you. So for example, Ledger's new cool device, they already want to advertise on us, where essentially they would put it into the relevant topics. So we are organized by kind of Reddit style structure, and they can only do that advertisement with our native token. So basically that provides the demand for the token. If you're a big company like Disney or whatever, they don't even know how to do their TikTok advertisement themselves. So they would probably use a third party to buy the advertisement in fiat, but we can use partially that revenue as a token buyback. So advertising is, planned to be the biggest piece of revenue, but in a way where it's not invasive
towards the users.
Got it. So not reinventing the wheel here, advertising. Tokyo, last question, please.
I just wanted to ask a question. How do you guys plan on your GTMs? Like what, let's say, obviously you would need a bigger audience and you will need a bigger user base for scaling the project and generating more and more revenue for longevity of the project. How do you plan to do that? And compared to the ongoing existing social media platforms, and many Web3 platforms came in terms of social activities, how do you plan to like be unique in that aspect, and how do you onboard more users on it and keep it more sustainable?
Yeah, so I guess one part of the question was related to the CPMs, or how would we price the advertisement. My co-founder was actually
go-to-market.
The last thing. Sorry.
I think it was GTM, go-to-market. How are you going to get more users?
Oh, GTM. Sorry. Yeah. So on the GTM piece, we continue to build with a bunch of the different projects, including the NFT communities, wallets, etc. Then right now we've had a lot of KOLs investing into the round. So, for example, Japan became the second largest market for us after their biggest community invested. So that's another key growth piece. And then we're doing some targeted paid ads as well through some partnerships where, for example, we can market getting a yield on your NFTs. So essentially, the more credentials you connect, so we have a separate system where you can connect any NFT across any wallets, which increases your credibility in the system, essentially providing you a yield in the system. So that's another way that we are planning to increase the GTM this year. And then obviously for the token launch, the launch pad and the whole TG strategy obviously can contribute a lot to the user growth as well.
All right, guys. Thank you so much, everyone, for coming. Today we had 4 amazing projects. Just to do a quick summary, Phaver that we just had has crazy numbers when it comes to adoption in crypto. We're still far away from the millions, but in crypto it is leading the charge, which is great to see. Futurent, incubated by Shisha Finance. We have another one. Talentre also has Binance on board. And Soil, they are supported by many partners, including Luna PR. All these guys, as you might have seen, they have managed billions. They have great track records. It was a pleasure to have all of you today. Thank you to all the VCs and partners. Again, we will allow you guys to connect after we'll publish a summary. And that was it. This is Alex from Gains Associates. We are a decentralized VC. We also invest in seed and private sales. We have been doing so for the last 6 years, early investors in big projects like Avalanche. And on that note, thank you guys. We will have more pitch competitions with strong projects. Keep building, keep going, and see you soon.
Bye. Bye.